at 6.6% and the fourth quarter at 5.9%. The risks are evenly balanced. CPI inflation for the first quarter of next financial year, that is 23-24, is projected at 5%, and the second quarter of next financial year at 5.4% on the assumption of a normal monsoon. Now, what do these growth and inflation scenarios convey? Let me summarize. GDP growth in India remains resilient and inflation is expected to moderate. But the battle against inflation is not over. Pressure points from high and sticky core inflation and exposure of food inflation to international factors and weather-related events do remain. While being watchful of the impact of our earlier monetary policy actions, we will keep Arjuna's eye on the evolving inflation dynamics and be ready to act as may be necessary. Our actions will be nimble and in the best interest of the economy. The aspect of growth will obviously be kept in mind. Now, over the last few days, and as usual at the time of every monetary policy, pre or post monetary policy discussion, there is a lot of discussion in the media, in the among various informed circles, whether the RBI statement is hawkish or dovish or otherwise. Now, I leave it to you to interpret whether it is a hawkish statement or a dovish statement or it is something else. But so far as we are concerned, I would like to state that the growth continues to maintain resilience. 6.8% in the current context, when the rest of the world there is acute slowdown of growth, 6.8% is a very strong growth impulse. That is something, the first point. Second thing is that the problem of inflation is not over, so therefore the battle against inflation has to continue, and we are in a state of, we will monitor all the incoming data, we will also continuously assess the future outlook, and we stand ready to act as may be necessary from time to time. The focus on inflation control continues, and there will be no let up in our efforts to bring down inflation to more manageable levels, and as we have said, first to below 6%, that is within the target range, and then move closer towards 4% target. So this is in the para 15 of my statement. Those of you who are interested could again refer to para 15 of my statement, which I think really summarizes all that we have been trying to say in this monetary policy statement. I would now like to move to the liquidity and financial market conditions. Overall system liquidity remains in surplus.